Thank you, Mark, and a big hello from London. This past week has, for a change, seen few weekly technical patterns in the markets I cover. In the currencies, we had only the one, and that was a weekly key reversal up last week in euro against the Japanese yen. There was an initial very limited follow-through higher at the start of this week, but we've since had a strong reactionary move lower, such that we are now set up to make an immediate countering weekly key reversal. Thus, if we close on Friday either over 173.35 or under, which seems to be more likely scenario, under 172.97, then we'll be on. Anything in between and we'll have a lesser outside week pattern. As I've said already, we are on the verge of looking, with just half the week gone by, at an immediate countering weekly key reversal down. Over now to the stock index futures, and we had a weekly key reversal down last week in the German DAX30 futures. This week we've seen attempts at both ends of last week's range. Not quite setting up for an immediate countering pattern, but not far off from it either. The key has been the support below from the slowly rising green short-medium moving average, which is currently at 24.031. Whilst the highs of this year, which is between 24.512 and 24.748, have been the cap on any rises. At the moment, we are not seeing an immediate countering weekly reversal, but a lesser outside week pattern right now. Next is fixed income futures, and we had a weekly key reversal down last week in the Japanese Osaka JGB futures. This week, well, we have seen yet another reactionary move, this time higher, though it is still held within last week's range. Finally, we had a weekly key reversal down last week in Paris European milling wheat futures. I was a little cautious about this when I spoke about it in my weekly grains and starches video commentary. The reason why was because we were setting up to make a weekly key reversal down, right at the lows of the recent market. However, I did point out one salient feature, which you should even now bear in mind. This week, the bright red March 24 uptrend, currently at 201.25, that held up prices originally in May but also managed to do so, and twice in early July, well, that is crossing over the purple middle time, which is currently at 204.5, of the late March to late May bearish shift pitchfork. The crossover is actually on Friday the 1st of August. Now, you may reasonably think that two separate supports crossing over at the same time, that the support would be possibly twice as much, and therefore offset the bearish weekly key reversal down we had last week. And when I first started in technical analysis so many years ago, I thought that as well. However, experience has shown me that this is instead an ideal opportunity for the market to smash down through two separate supports at the same time. And that's what I said in my weekly video commentary on Paris milling wheat last Friday. If we now look at this week's actions, we saw an immediate reactionary move higher this past Monday and the start of Tuesday, but by yesterday, the end of yesterday, the market had turned lower, and today we are seeing prices pushing below both the purple middle time and the bright red uptrend, breaching it. So my point is that we may well be following on lower to that weekly key reversal down seen here last week. It is just coming closer to when the crossover happens. Watch this space. As always, I'm happy to answer any direct questions with anyone who's interested. With that, I'll finish this section from London, and I hope that you found these comments useful.
Thank you for listening and watching this broadcast. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. The copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.